Hello, everyone, and welcome to another episode of the Heartland Franchise Guy, your insider's guide to all things franchising in the local area. I'm Blake Martin, local small business franchise owner and your Heartland Franchise Guy. This is the place for advocacy, resources, and education on all things franchising and small business in the local area. And it's a great place for entrepreneurs who are looking to learn more about the franchising industry. So the bank told you no for your loan for a new franchise business or for any new business. What's next? If you've heard no from a banker recently, this is probably going to be your favorite podcast in the history of forever, because our guest today is somebody who helps with solutions after that happens. Allow me to introduce Jim Reiff, Executive Director of the Nebraska Enterprise Fund. Thanks for joining us today, Jim.
Hey, Blake, thanks for having us here. Always glad to be on with you.
I appreciate it. And of course, the Nebraska Enterprise Fund and organizations that do what you do go well beyond just the micro-lending services that I was referring to in the introduction. And we're going to jump into a whole bunch of that today. I have a first question for you, though, as far as context. I just came back from a conference in Orlando. My question for you as a professional in the lending industry is it true that Walt Disney got told no by something like 300 bankers when he was proposing the idea for Walt Disney World?
You know, Blake, I'm not real sure how many times he was told no. He was told no multiple times. And this is fairly common. You just need to keep going. There's always going to be somebody that will take time to listen to an idea. Sometimes it's not your first or second person you talk to. Sometimes it takes 5 or 6, but there will be somebody that will listen and give you positive feedback and good input.
And in fact, sometimes that's you guys, right?
We hope so. That's the goal.
So in other words, if we assumed that old Walt Disney hadn't been asking for tens of millions or whatever the investment was back then, and let's say Nebraska Enterprise Fund existed and he was in this area, you might have been able to help that scrappy entrepreneur with alternatives to traditional bank lending, correct?
Absolutely. We would have sat down, listened to his pitch. If he could demonstrate that he had possibility of developing positive cash flow, ability to meet debt service, we would have looked at underwriting it and doing a small business loan to him. We go from about $1,000, $2,000 all the way up to $150,000. And oftentimes the banks start to hit at 100,000 and above. So there is a gap that we're meeting there. So absolutely, provided he met underwriting criteria.
Fantastic. And thanks for explaining it that way, because I guess really the key, as you said in your first comments there, is you're getting told no by a lender or a bank. Now that's just step number one, right? It's very common and there's other solutions out there and you may be one of them. And speaking of you, help me understand this more clearly. So Nebraska Enterprise Fund, the organization that you lead, fits into a category of organizations called CFDIs. Is that right?
Almost. CDFIs, Community
CDFIs.
Development Finance Institutions, correct. And we're all regulated, actually.
Somebody typed that wrong in my notes, by the way.
Okay. Don't want to guess who that was, Blake, but CDFIs is a part of the U.S. Treasury Department. It's its own CDFI fund. So every year they review us. We have to be making a certain percentage of our activity in a targeted or eligible market.
Gotcha. So what is your mission? As a CDFI and as the Nebraska Enterprise Fund, what are your focus areas? What are you supposed to be doing with the funds, with the grants, with the monies that you're raising and bringing into the community?
We're really here. We want to make sure every single business in our target market, which is from Nebraska all the way into Southwest Iowa, we want to make sure every business has the opportunity to start up, to grow, and to develop. That comes not just from financing. It does come from capital, supporting capital decks and so forth, but it also comes with the technical assistance, training, coaching. Sometimes small businesses, all of us have been there. Who do I talk to? Sometimes we can just be an ear and help you process through an issue where we may not even give you advice. It's just a chance for you to say, this is my business. I need somebody I can trust that I can talk to about my business where it'll stay confidential and give me a platform to speak to. So yeah, so capital up to 150,000 or so, training, all kinds of training courses, business planning, accounting services, joint trainings with other resource providers, and then one-on-one coaching. We use a tool called Growth Wheel that really can help you dig into your business and where you think you might have strengths or weaknesses but want to know more. We can really work with that to help you do that.
Fantastic. Quite a breadth of services. How is all this funded? How do you get your funding?
We fund in all kinds of ways. I get asked this all the time too. It's a great question. For the loan portfolio, which we have close to $15 million of asset base now that we can be lending to folks, it comes from multiple different sources. Some of it is state funding through their Business Innovation Act and DED. They've been really generous over the last 28 years to Nebraska Enterprise Fund.
That's DED is Department of Economic Development, right?
Correct. Yep. And they've been super generous. Some federal money in terms of grants, like especially from the CDFI fund. We also borrow money from the federal government. People don't realize this, but we are an SBA micro lender, but it's a little different than when the banks work with SBA. We actually borrow the money from SBA and they expect us to repay it. So we need to make sure the business we work with, we can take more risk, we can take more chance, but we still need to be able to repay when SBA's money through that. Alongside, they do contract with us to give technical assistance and provide technical assistance. And then we have, as most of us, if you're in Omaha, you know, we have great philanthropy here. So we have a lot of foundations that have been super supportive. We also have the banking community is also a wonderful partner of ours in this endeavor. That's one great thing. The banks have really stepped up in all kinds of ways. So the benefit of, and the reason I bring up the wide range of sources, that also means we can help most businesses. I say if you're legal, in most cases we can work with you. Whereas if we only had one source of funds, we might have limitations. I have 5 or 6 sources of funds, so that gives me a lot more breadth.
And so your comment about the banks help out, would that be? Is that a situation where the banks know, hey, they're regulated, right? Not only by the federal government, but by their own stakeholders. So they can't do every loan. And in some cases, I would guess that the loans are either too small or just don't have all the criteria they need. Is that why they are trying to help with some of the funding of what you do?
Absolutely. There's a lot of reasons we might work with the bank. Oftentimes they want to do training with us and provide some of their resources, and that helps them receive their CRA service credits, but it also helps them get their name
Community Reinvestment Act, right? Sorry, this stuff so backward and forward.
Absolutely, Blake. And the bigger the bank is, the more obligation there is to meet those. But it gives the bank the opportunity to do that, but also to reach out and get a foot into a new population. Because every time you do training, as you know, both of us do training all the time together, even somebody new comes to the room, so your network expands. You create another contact, another knowledge point. But then it also is to reach their CRA obligations. But sometimes we also will do what's called gap financing, and that might be a case. Say they need a $250,000 loan. I'm just spitballing here, obviously.
Yeah.
The bank might say, Jim, we're comfortable going to maybe 150. But we can't do the whole 250, and the owner says, well, I've got 20,000 or 30,000, whatever that might be, but I'm pretty recent out of college, or we just had a new member of the family, or whatever reason. We might come in and gap that difference. So in that case, the bank takes a first position, we take a second position behind the bank, so they stay clean both with their regulator and with their internal regulations, which we all know the banks don't want to deal with regulators saying, oh, this loan is qualified. Now all of a sudden the bank needs to put more money aside as a reserve.
Right.
So
that's brilliant. So you're literally, in order for that entrepreneur to get the additional, to fill that gap, to get the additional money that they need for that business endeavor, you're mitigating the risk for the bank, taking that second position, as you said, but you're mitigating the risk for the bank and making them feel more comfortable about, we can provide the lion's share of this loan. NEF comes in, tops it off, fills that gap, and everybody's happy.
exactly, and that's a perfect example. And we love working with the banks in that way. We like to see, I've been asked, do you compete with the bank? It's like, no, I don't compete with the bank. The bank could put us out of business in about 10 loans, let's face it, so we like to rather try to augment what the bank is doing. So if the bank needs a gap position, or sometimes the business is just, maybe it fits a lot of the criteria, but it doesn't fit every criteria that the bank needs, then we can do a direct loan as well. And it does happen. We're seeing it more and more where the bank calls us up maybe 3 years, 4 years, 5 years later and says, hey, NEF, I've got this business and they say they're banking with you. Do you care if we take you out? And ironically, we say, no, that's great. Most of the time you're trying to keep your best customer. But in this case, because of our goals, we're trying to get them into the banking.
Yeah, you're the lender, that you're not publicly traded. There's not stock in your business. And so your interest is very different from most banks, right? Meaning, let's get you out of this loan as quickly as we can.
Yeah, let's get you out and into a better situation. Not that we're bad. We're very competitive, but the bank's got so many more products. They got so many more features. There's so many more things a bank can do for a growing business. We're happy to play our role, but we realize that the bank has a lot of capacity to play a bigger role.
Yeah. So somebody, an entrepreneur, should come to you when they hear no from a bank. Are there other times when it's the right time to come to Nebraska Enterprise Fund and have a conversation?
We like to tell anybody, come sooner than later. So if you think something's coming up, at least make an introduction, get to know us, let us get to know you, even if you are working with some banks as well. That gives you a little bit of leverage too. You can say, well, if you're nervous about the full amount, what happens if I got somebody to gap 20% or 10% or 26% or whatever that number turns out to be? Sometimes that, just knowing, we've had a couple cases where we actually approved the loan, they went to the bank and the bank actually said yes. So, that's okay too. It takes a little bit of work on our part, but I told my staff, it might not feel like it, but that's actually a win, because that proves that we were working with a business that was bankable or going to be bankable real soon. So I say sooner. Sometimes we'll meet jointly with a bank or a bank with you, so that both players are on the same page and you don't need to bounce back and forth. Once you have a relationship, that way you can just, the banker and my staff will work together to work on your project. So I think and then anytime for technical assistance, if we can't provide it, Blake and I both work or do stuff with SCORE. We interact regularly with NBDC, the REACH program, if you're a small and emerging Omaha area business. I mean, there's so many resources that maybe we don't have the answers, but we can point you in the right place.
You guys are a community connector. Yeah.
We all try to be.
So kind of going back to that theme of, when a bank says no, and there's lots of times that banks have to say no, you must have a broader range of criteria. First of all, you can go all the way down to very small loans, right? You're willing to work with somebody on a what would be an incomprehensibly small loan for a traditional bank. Is that right?
Yeah, well, we're working with some at $1,000, $2,000 right now. We've just started a new product. It's a credit building product for entrepreneurs. This is what I need to make a distinction. It's not for the whole public, but it's for entrepreneurs that maybe have a substandard credit score. Well, there are strategy if you have cash flow and so forth. There's strategy you can put in place to build your credit. It takes a little bit of time. It's not going to happen overnight. We actually recommend not signing on the dotted line to somebody that expects you to pay something every month or every week. We've seen that happen, and it's like we've actually seen that happen where people were paying over $100 a month, and if they would have just been paying that extra $100 a month towards reducing their debt load, their credit would have started to rebuild. So
Gotcha.
there's strategy we can help with. We're working with one of the banks on that product too. So
Yeah.
we'll do a small loan and then get a secured credit card to help folks rebuild their credit. And then we provide counseling and training on the back end as well. But yeah, well, we're doing several loans at $3,000, $4,000, $5,000, all the way up, and lots of times, Blake, what we see for the banks can't work with somebody often because of credit, because of collateral, or
Yeah.
because of their initial capacity. They may not have run a business ever, or they're new to the business space, and the bank is saying, "We like it, but maybe you need a little more time in experience."
Gotcha. And when you say because of credit, what you mean is you're working with people that may have credit scores 680 and below,
Correct.
versus that
Yeah.
tends to be one of the thresholds that most banks have to use, is 680 and
Yeah.
above.
Yeah, and we may work with somebody at a 620 or 630, where the bank says, "Come back when you have a 680 or a 700." So,
Right.
and
What are
working
the
with, oh, go ahead.
Sorry, go. No, you go ahead.
Working with us, we do report to the credit bureau. So as long as you're a positive payer, that's going to show up positively. And that too, over time, any installment loan will help your credit over time. It maybe not in the first 2 or 3 months, but after 6 or 8 months, it starts to show positive histories.
Gotcha. Thanks. That's actually some great additional insight, because no better way to be able to turn it around and start investing more, or start borrowing more capital to invest. The comment that you made on the topic of additional trainings for folks, like, could you give me an example of some of the additional training that you provide?
Yeah, we just finished, and we're gonna out. This one was North Platte, but we're gonna do it again. I forget the date exactly. Apologize, but we do QuickBooks training regularly. So in our fiscal years, June 30th or July 1st. So I'm starting to think about next year, and I guess when this broadcasts, it'll be almost next year for me anyway. June 30th is
Next
New Year's
fiscal
Eve.
year? Okay.
Yep, that's my New Year's Eve. But we'll have a bunch of QuickBooks trainings, for example. It's a full day training, and it'll focus on how do I start up and get information into QuickBooks and get going on QuickBooks. We're looking at a new format for next fiscal year, which will have some advanced QuickBooks topics. We do business planning training regularly. We do what's called a bail. It's a banker, accountant, insurance, and legal advisor, and we have a panel of a bail. We do. Blake was at our last business summit. We'll do another one in September, where we have about 20 different resource providers, all different types.
Yeah.
The franchise guy was there. I saw him. Score was there. NBDC. We had 2 different legal advisors. We had, I believe, 3 banks there, Kitchen Council, and No More Empty Pots. That only names about a third of the people that were there, providing advice, and it was all free. So somebody could come in, and you want to see a legal advisor. There's 2 choices. You want to see a banker. There were 3 choices. You want to talk to somebody else. So we get super excited about that. But then we do, just the basics. Is borrowing makes sense? Does starting a business make sense? I think we do a lot of similar things that you do with FranNet, just helping educate people. Does a franchise make sense? Well, for us, is going into business makes sense? How do I plan for going into business?
Yeah.
What's my cash flow? How do I even understand that? So it's a whole range from the real basics to pretty complex once you get into QuickBooks or or business acumen, sales acceleration, or some of those topics.
Thank you. Wide variety, and glad you're able to share that with us. By the way, one thing that I forgot to ask you in regards to the lending to the microloans that you provide, what do the terms on those look like as compared to other loans that people might get from a traditional bank?
Yeah, we amortize those, Blake. So they're amortized usually, I'd say from 3 to 5 years is pretty typical. We might go a little longer depending on the source and use of funds and the needs. If there's some real estate involved in terms of real estate acquisition and construction, we might go a little longer. Usually, in real estate, honestly, that's usually where we work with the bank really, really well, because the bank can maybe do the real estate portion. We can help with the equipment working capital side. In terms of, we're probably just slightly higher in the bank at 7 to 8%, which is either half to a third of what a credit card would cost. And I know there's online lending solutions that cost 24 to 36%. And the other thing is,
good deal.
It's a good deal. It's a great deal. We're also fixed. So if you take a loan with us, I don't know where interest rates are going to be 6 months, let alone 24 months from now. But whatever you have with us, we do it fixed, so you're going to pay the same amount. So interest rates end up going back up to 10%. We're not going to change them upwards, but if you have a variable rate, the bank is going to adjust it. So that's just something. And Blake and I were both toddlers back in the 80s. When our parents had loans that were 16 to 20%. So, it something we've forgotten about, but it does happen from time to time.
Yeah, so we're still historically low for sure.
Yeah.
Well, Jim, this has been a wealth of information, but we're going to have to wrap it up. So first and foremost, the best way for somebody to get a hold of you and learn more about Nebraska Enterprise Fund is that URL right over your shoulder there, correct? nebbiz.org.
Yep. nebbiz.org. Our information's there. You can always email myself or Jamil Hamilton or BC Clark. My email is jimr@nebbiz.org. And BC Clark is in charge of all the training. Hers is bcc@nebbiz.org. And Jamel's is jamelh@nebbiz.org. And the easy way to think of it is our first name and first initial of our last name at nebbiz.org.
Fantastic. And if for any reason anybody doesn't get that, just scan the QR code on your screen. I'll give you our contact info and we'll get you right in touch with them. Jim Reiff with Nebraska Enterprise Fund, thank you so much for your time and sharing all the details about the Nebraska Enterprise Fund with us today.
You are most welcome. And this is Blake Martin with FriendNet. So thanks again, Blake. We really appreciate the opportunity.
Thank you. And today we are the Heartland Franchise Guys. So thanks to all of you for joining us on another episode of the Heartland Franchise Guy podcast. See you here again soon.